Hello, it's the Ignorant Entrepreneur here to give you a recap of Jim Cramer this past week and what to look for this week. As a series of large IPOs consumed Wall Street's attention this week, money managers trimmed holdings in their biggest tech gains to raise cash to buy into newly public companies, which put pressure on the broader market. The money is also moving to value clinical plays like Dow Inc., Caterpillar, and 3M, Cramer said. I think it's time to start putting cash to work. Instead of tech, though, I recommend picking up some of the historically cheap stocks that are being brought down by the entire averages. The comments come after a down day for the major averages that saw Amwell join fellow newcomers JFrog and Snowflake on the public markets. Telemedicine provider Amwell raised $742 million after selling more than 42 million shares at an initial offering of $18. JFrog, a software development and operation platform, raised about $510 million when it sold more than 11 million shares for $44 apiece in its Wednesday IPO. Snowflake, a data warehousing company, was one of the biggest tech IPOs of the year, selling shares for $120 a stock in its IPO, raising more than $3 billion. Snowflake, which received much more demand than first anticipated, declined 10% in Thursday's market. The Dow Jones Industrial Average declined 130 points, or 0.47% on Thursday, followed by a 244-point decrease, or 0.88% Friday. I expected a correction, and that's exactly what we're getting here, Cramer said. That's why we've been raising cash for my charitable trust, and I've spent weeks telling you to do that. CNBC's Jim Cramer said Thursday that investors will want to have money in the stock market if Congress approves another coronavirus relief bill. If we get a stimulus package and you're out of the market, you will feel awful, Cramer said on Squawk of the Street. I do feel the stimulus package is very hard to get, but if we do get it, you can't be out of this market. Democrats and Republicans in Washington have been locked in a stalemate since late July after key provisions for the March $2.2 trillion rescue package expired. The two sides are largely at odds over the scale and scope of additional relief package, with Democrats favoring more expensive legislation while GOP negotiators have been pushing for a more limited bill. President Donald Trump, who took some executive actions last month designed to extend aid to unemployed Americans, indicated at a news conference Wednesday evening that he would be willing to support legislation around $1.5 trillion. House Speaker Nancy Pelosi has reportedly called on Republicans to support a bill worth about $2 trillion. On Wednesday morning, White House Chief of Staff Mark Meadows, one of the administration's main stimulus negotiators, told CNBC that he was probably more optimistic about the potential for a deal in the last 72 hours than he has been in the last 72 days. Cramer has warned that without additional stimulus for the U.S. economy, devastated by business restrictions designed to limit the spread of COVID-19, the stock market rally from its March 23 pandemic low could be a risk. Tech stocks, which have been the main driver of the market rebound, experienced weakness this month, pushing the Nasdaq last week briefly into a correction by dropping over 10% from its record high on September 2nd. Cramer reiterated Thursday before the stock market opened that investors should probably take some profits in tech, even if there is a stimulus bill approved. Just cut down the exposure to the highest tech stocks, he said. Also on Thursday, Cramer expressed concern about the signal that the doubling of Snowflake stock on its first day of trading sends about the overall market. I think the amount of money that the institutions had to spend to be able to get their second half of Snowflake after they got their first part of the IPO shows that there is very little discipline. That does not bode well. Now, moving over into Friday, Jim Cramer says after a blizzard of IPOs, there's the post-Snowflake hangover. Plus, he's got the game plan for this week. The avalanche of IPOs is really hurting the stock market, Jim Cramer told his Mad Money viewers Friday, after another day down on Wall Street. Cramer reminded viewers that the market operates on supply and demand, and right now the new supply from IPOs like Unity Software is overwhelming demand, and the whole market suffers. Cramer's game plan for next week action begins on Monday, where we learn if there is a deal to buy TikTok after President Donald Trump's ban on the social media app on Sunday. The Trump administration is scheduled to begin banning downloads and use of the popular Chinese-owned apps TikTok and WeChat late Sunday. Now, you may think this is pretty unfair, but I assure you, Facebook, Twitter, they're not being used in China. Next on Tuesday, we get earnings from AutoZone, Nike, and KB Home. Cramer said he'd buy some AutoZone ahead of the quarter and more after the company reports. He was bullish on Nike's direct-to-consumer business and remained bullish on housing. Wednesday brings earnings from General Mills, the packaged food maker, with a juicy 3.4% dividend yield and accelerating sales growth. Thursday will be a big earnings day for the week when we hear from several of Cramer's favorites, including Accenture, Jabil Circuit, CarMax, and Darden Restaurants. Cramer is also bullish on Costco, telling viewers to wait until the company reports to buy on weakness. Finally, on Friday, we'll get a read on the economy with the latest durable goods orders. Cramer said he expects the number to be good and confirmed what FedEx told us earlier in the week, that commerce is picking up. Now, lastly, before we go, I just wanted to touch on the lightning round. Here's what Jim Cramer had to say about some of the stocks that Colors offered up during the Mad Money lightning round Friday evening. 3D Systems. You can own this one, but I don't think it's going to make you more than $1 or $2. CBRL Group. There's not a lot of travel going on, so I'm not a fan. Zebra Technologies. The company is a great company. As shares come down, I'd accumulate more. There you have it. This week's recap and going into next week, what to look out for. I hope you enjoyed this video. Thanks for watching. Subscribe, like, and I'll see you in the next video. All right.